From Microsoft and Google's intelligence cloud services to large-scale solar plants, new ways to live and work are being enabled throughout Qatar. The port of Ras Laffan has been purpose-built to meet the hydrocarbon exports of all the industries, while Lusail City, 23 kilometers north of Doha, will accommodate 500,000 people, complete with a marina, entertainment, energy and sports districts. Future living becomes a reality at Sharab downtown Doha. A $5.5 billion regeneration program has transformed the capital's center and can claim to be the smartest, most sustainable built city district in the world.
Mashira project blends Qatari aesthetics and heritage with modern technology, with the focus on sustainable and economic development. The aim of the project was to bring people back to the roots, to regenerate a historic area called Mashira and create a modern city that was based on some of the best things that were taken in architecture from the past with modern technology. We would like to enable connectivity, require less energy, use less water, and create less waste. But in our city, we've connected all of the buildings and all the different applications in one command and control center, so the entire city district is smart. Thanks to Qatar's strategic geographical position and its neutral and flexible economic, political, and commercial ties with other nations, Qatar is very well positioned to take advantages of the changes that are happening in world trade. As we prepare for the World Cup coming up, it's an extremely exciting place to be doing business, and I can't think of a better place to be than Qatar right now.
A SARS-like virus which has infected hundreds in China.
COVID-19 is spreading faster in India.
Europe is now the epicenter.
The UK tonight acknowledged it's losing its battle.
And more than 3 million people have died.
Has now reached the United States.
Kingdom has become the first country to approve the Pfizer coronavirus vaccine.
The coronavirus pandemic has tanked the global economy.
It's worse for a single quarter than we ever saw during the Great Recession.
4.4 million people filing for initial jobless claims.
Around 50 countries have begun vaccination programs against COVID-19.
Other countries will have to wait a while longer.
Outrage at the death of George Floyd.
Demonstrations, riots, and violence from coast to coast.
The events in Washington have taken a violent and tumultuous turn.
Israeli airstrikes flattened 3 apartment buildings in Gaza City.
Administration's ambitious climate agenda. The change here is just monumental.
Coast to coast, signs of reopening.
Hundreds of families separated by COVID-19 were reunited at last.
Hello and
and welcome to the Qatar Economic Forum powered by Bloomberg. I'm Zain Verji in Doha. We want you to engage with us on social media, so follow us on Twitter at Bloomberg Live. Use our hashtag Qatar Economic Forum. In the past, when our ancestors had questions, they looked to the heavens for the answers. Today, we look down into our screens and ask our search engines, will it rain today? Where can I find my favorite food or a great job? In the digital age, information is but a click away. But in return, what are we giving up? The same tools that give us convenience also allow merchants to harvest our personal data. Shopping for something? Looking for a place to live? They know and track us. These massive data streams are changing lives and business practices. With that, let's start our program with two of the world's major real estate investors and how they're adapting to these changes and what it means for society.
Hello there, I'm Haslinda. I'm an anchor for Bloomberg TV. A year and a half since the pandemic started and pent-up demand is back in a huge way, and nothing like real estate to tell that story. Prices globally are surging, bubble warnings are flashing everywhere, something we've not seen since before the financial crisis. Record low rates, unprecedented fiscal stimulus, expectations of a strong recovery in the global economy, all contributing to that. Now let's get insights, explore opportunities. Tom Barrack, Barry Stunlicht, thank you for your time today. Tom, let's start with you. When you look at real estate, so much money sloshing around, it looks like serious problems have really been averted. Did the Fed, did Congress, did Treasury get it right? What's your sense?
Linda, thanks for having us. I mean, I think, and Barry will agree that the amount of stimulus that's put into the system, the Fed's action and purchasing, interest rates, the proliferation of everybody having the same information and a flood of liquidity, and a focus on very minor risk factors is amazing. So too much of everything, readily available information, a decreasing edge for real estate generally. When you look at the bubble in the housing market, I'm sure we'll talk about it a lot. But this is nothing different. It's cyclical. Real estate always ebbs and flows with interest rates. It ebbs and flows with inflation. Those are things that we're all confronting at the moment. And real estate is a dinosauric asset class, right? It takes years and years and years to develop a real estate theme and an asset class, and we have technology going at warp speed. So you have kind of a mismatch. You've got technology 3.0 going to an industrial revolution 5.0, and real estate is going to have a hard time catching up. But too much money, too massive amounts of stimulus, probably to everybody instead of to the right people, and I think we're going to see inflationary consequences and interest rates rising as a result.
Barry, what's your sense? I mean, too much money sloshing around right now, too much liquidity, too much of almost everything. What do you think will happen when eviction moratoriums end, when mortgage forbearance end? Can we manage to limit human tragedy in the end?
Good morning. Hi, Tom. The Fed has overdone it, right? I mean, they've overstimulated, and they're actually looking in the rearview mirror instead of looking ahead. You know, we have over 9 million empty jobs in the United States now, and every business owner and every hotel we own and every shopping center and every restaurant can't find workers. It's actually okay because minimum wages will rise, but the incentive not to work, which is resulting from the overstimulation, and then trying to cure things wholesale with giant checks when really the private markets would do a better job of distributing capital, is a noble effort, but a poorly designed program. So, for example, in the infrastructure bill, everyone would agree that roads, bridges, and tunnels in the United States need $1 trillion of work. That would be a good investment. There'd be a return on that. The rest of it, which they're arguing about, is sort of, an idealistic view of the world. when you look at the U.S. economy, you have to remember the CARES Act at $1.9 trillion, more than $500 billion of that was going to state aid. The states haven't gotten the money yet, and the U.S. economy is booming already. I spend my winters in Miami. They're getting $1 billion from the federal government. They can do whatever they want with it. And you look at the economy, you also look at, Europe hasn't opened. So we have a booming U.S., a booming China feeding the U.S., and a closed Europe. So this is only going to get worse, not better. Inflationary pressures are going to stay in the system. Bottlenecks will stay around for a while. And that will lead to inflation. One thing I'll disagree with, Tom, is real estate was the last guy to play in a booming cycle. I mean, the stock market's filled with a casino and another part of the market that people pretend they know what to buy to sell. The venture, every day I review a company that's making $2 million that wants $30 billion valuation. Everything is stretched, and real estate at least has a yield, and yield in a yieldless world is super valuable. So, people can't sleep in their computer. So homes and multifamily are interesting asset classes. Travel will come back. Even if business travel is down, the denominator is going to grow. So you'll see increased travel around the world, and it's being reflected in the hotel stocks globally. Retail, it's catching a bid. People are getting out of their house. It's still a challenged asset class. Different experience in Europe. I'm in London. The stores are full with shops. There aren't people in them, but they're at least rented. And parts of New York or other cities in the United States. And the office markets are, they'll come back. I mean, the one thing I think about is I think about office being a dinosaur asset class, is that Amazon bought the Lord and Taylor building in New York City in the middle of the pandemic, and Google bought the St. John's Terminal building, which was another 2 or 3 million feet to go with their square footage they already have. So they're kind of saying one thing and doing another, and those are the tech leaders. So I expect you'll see these companies move into Europe as they build their hubs and they expand their footprint in Europe and in Asia. So I'm constructive on real estate. Things are pricey in every asset class, and I think real estate's just one of them. And your whole view right now is where are rates going to go? And obviously the 10-year 150, and you're like, why is it here? I mean, the economy is booming and inflation is rising, and the 10 years 150. And the only answer is there's just too much money suppressing yields.
You're constructive, but you're also sounding a note of caution. I mean, what kind of opportunities are you anticipating? And linked to that, are you seeing distressed opportunities right now?
Well, you're seeing some miscapitalized entities that need capital. The owners held on through the pandemic, but now the banks are saying, okay, look, you've got to pay us. So you're seeing that. I think you'll see a lot of banks selling loans in the next year because the bank stocks are fine. The banks can take the hits, and they don't want to take the assets back. So I think you'll see some loan sales. I mean, our focus in the last couple of years has been some of the alternative asset classes, much like Tom, but multis and affordable housing has been a big theme for us. In Europe, we're doing apartments in Ireland for rent. We're doing some Spanish office at very cheap rents, that we think will rise. It's classic real estate investing. You're trying to find places like we built an office building in Miami in the pandemic and leased the whole building. So there are pockets of opportunity. Thematically, it's kind of hard, but you just find those markets that are strong and growing, Austin, Texas, and avoid the ones that are seriously at risk, like New York and San Francisco, for 100 reasons. It's not just rents, it's costs. And the costs are rising faster than the rents, and rents probably aren't going to rise for a significant period of time. So, we like hotels. I'm on my way to Copenhagen. We bought a hotel in Copenhagen. I'm going to go look at it in the pandemic from a distressed seller. So he's never sold some stuff, but he had to pay the banks, and he's selling one and now a second one of his properties. So I'll meet with him tonight. So there's things to do, but it's with a pin you find these opportunities. Not the other thing we've been doing is big public company takeovers. So the public market's exaggerated in the wrong direction. And while private individuals held on for better pricing and weren't going to sell into the pandemic if they couldn't, public companies were, the stock prices crashed. We just took private extended stay hotels. We bought 10% of the company at $9 a share, and we took it private at 20. So 2050, I think. So, there's things to do. We did this. We have a tender offer in Japan on a company. We're working on a company that's headquartered really in Germany. And we've announced a deal on we just took private a company in the UK that has a logistics base that was public. So there's needles in the haystack. There always is. Tom and I have been doing this for way too long. And you just got to look deep in the ocean. They're not floating. The good things aren't on the surface right now. Those are too obvious.
Barry's looking deep in the ocean. Tom, how about you? I mean, do you see the stress opportunities right now? And when stimulus is unwound, will it be orderly? How do you see this playing out?
No, I think to see the opportunities, you have to be at scale. You have to have a global company like Barry's that's just looking for an edge, so that instead of creating a theme, you find the salmon swimming under your feet, take advantage of that. But that takes professional players on a global basis in Main Street markets, capital markets, and all the asset classes. And quite honestly, I wasn't smart enough to do that. So 3 years ago,
pretty good.
but looking at who are the contractual obligors on real estate. Barry has an amazing hotel operation. The One, we had lunch there together a few weeks ago. I mean, it's 9 restaurants, hundreds of rooms, condominiums, swimming pools. It's the best of the best, but it's an experience, and it's mark to market daily with the guests who are appearing or not appearing and spending RevPAR dollars. So 3 years ago, we looked and said, real estate is unbelievably competitive. It's yield based, and the world is going to total return, right? The top 15 tech stocks, I mean, much to Barry and my frustration, if we would have just invested in the top 15 tech stocks 3 years ago, our returns would have been much better in the near term than they are.
And I would have
today.
been in Central Pay next to you.
Right? Because the contractual obligors are the 5
work.
So we switched and said, we want to go to real estate of the future, which is infrastructure, right? It's digital infrastructure, radio towers, microcells, fiber, data centers, smart logistics, which is the infrastructure of the future and has counterparties of long-term obligors, the best credits in the world, who are now doing what real estate used to do, right? When we first started in this business, what you did is you went and you bought a piece of land, you got it entitled for something, you got an architect and a contract, you spent a year developing the plan, you spent 2 years building it, you went to IBM or Xerox, you got a lease that was 200 basis points over the amount of money you were borrowing to build that, and you clipped coupons for 10 years. And always the enemy was CapEx, right? The enemy in real estate in every asset class is CapEx, which is why digital is so interesting, right? The CapEx involved for radio towers or microcells or data centers or smart logistics or fiber are very limited. And the obligor is taking that risk over a long period of time. So we switched from legacy assets to digital assets. And fortunately or unfortunately, the pandemic came, which gave us this euphoric rise. So if you look at the old and the new world, there's plenty of opportunity, but you've got to be with pros like Barry. But the new world in technology 3.0 is something totally different. There were no digital REITs 10 years ago, 0. In the last 5 years, the top performers across the market in general have been digital REITs. So that is going to continue. 5G, if you look at where are people spending money, right? Where do customers spend? Housing, hotels, industrial, all the things that Barry is in, for sure. And that takes massive scale and expertise to be able to produce the product to those people. If you look at 5G, just 5G, the rollout of 5G, so the internet of everything, the connection of everything. There's $580 billion that are going to be spent in the next 4 years just in infrastructure for 5G. So we go where the puck is going. That's being the total solution provider to all of those tech users and companies that are going to rely on bandwidth of one sort or another to deliver the product to disintermediate the buggy whip industries. Buggy whip industries will be fine. Great companies like Barry's will pick and choose where the edge was on that. But the wave, which is where we're going, is in the digital frontier. And real estate needs to be a partner with the technology companies to provide the infrastructure and the path for them to proceed.
Before I pick up on,
can I comment on? I mean, imagine there was a town of 100,000 people that was going to 20 million, right? That's actually the digital space that Tom has so successfully pivoted into. It's really that kind of revolutionary change in the way we function as humans, and the Internet of Things, and the expansion of 5G, and the data that will be needed, and the servers and the pipes to connect everything. You can argue about the slope of the trajectory, but it's probably higher than they say, or will grow faster because we've always underestimated. And it's global; it's needed everywhere. So, it is an asset class that we've pivoted into. We've done some data center stuff in London and in Virginia and some other places. But Tom recognizing that trend, he got. We say stay. I always tell our guys that the flow of capital can overwhelm fundamentals. And when you're riding a long-term trend, which Colony, Digital Bridge, I guess they'll call themselves soon, has moved themselves into, it's a very powerful wave, and because it's powerful, capital continue to flow there. The question is pricing, right? Pricing everywhere has gotten near and dear, and people recognize the opportunity. And so once you build the expertise, which they have in different verticals in the space, you can add, like we can in apartments, and we can to some extent in hotels. We can underwrite it differently. We have more confidence in our ability to operate it, in our margins, what we can do to occupancy, what we can do to credit enhancements, what tenants are looking for space. It is equivalent to ordinary real estate, or the bread and butter that is what most people think of as real estate. So it's a super exciting opportunity. And like everything, people know about it. So pricing is tough. So you have to be an expert to really compete.
When you talk about pricing there, when do you see pricing reflecting fundamentals? Because currently, of course, it's not.
I'm going to disagree. So when we started in real estate, there was only one place in the world you could buy buildings at like 3 or 4% yields and finance them at 1%, and that was Japan. And pretty much you can do that all over the world today. Cap rates, which seem very low, reflect really the cost of debt, and debt is really low. Of course, the German Bund is hovering around negative, and so like we're buying apartments, and you say, you're getting positive leverage. So if you get, meaning the cap rate's higher than the cost of financing, and materially so. So we have a vehicle called a non-traded REIT, and we kind of target a 6.5 unleveraged, and we've bought $10 billion of real estate the last 18 months. And we can achieve that just buying generic apartments and levering them, because the Fannie Mae and Freddie Mac are fairly, they're aggressive lenders at tight spreads because everyone wants yield. So from that perspective, the day will come when cap rates might reverse. The day will come when multiples in the stock market will come down. You see companies trading at 300 times EBITDA. And, Tom and I don't know those multiples. We don't even know how to underwrite things like that. So, I think, and now they've stopped with EBITDA, and they just talk about multiples of revenue as if all companies were the same, and all companies had the same management team, the same competitive advantages, the same addressable markets. It's kind of, I kind of giggle because this usually means it's the beginning of the end. And Tom and I are definitely remember 2000 and 2001 when the NASDAQ dropped 82%. And, it feels like, I don't know, I could guess what would cause that to happen, but the trees don't grow to the sky. Tom and I have been through, I don't even know. Tom probably has been through one extra cycle than me. He's slightly older than I am, but we've seen a lot of cycles, the two of us, and they're all different. But this one, the wilder the swing to the top. I mean, it is very much the Roaring '20s in the United States. I mean, spending up 22%. I mean, people are spending 13% ahead of 2019, and people are having a joyous ruckus party. And the 20s were fun until 29. So, being the person who always worries about the downside and lets the upside take care of itself, I'm perpetually nervous. But I appreciate the asset class does not operate in isolation of the stock market, equities, and the credit markets. And investors are so hell-bent on thinking they're safer in credit. Well, when you're buying high-yield bonds with no protections at 3 3/4 and 4, you are taking a lot more risk than either Tom's digital assets or my apartments or whatever else I'm buying. So, I think it's all relative.
Let me jump in, because I think one thing that you do, which everybody should look at, is risk mitigation from experience, right? So Barry goes up and down the capital stack. So where you are, what we've learned through all these cycles is real estate is resilient. And it always comes back. So everybody says New York office is going to hell in a handbasket. It won't. It'll come back. It'll recycle. It'll take massive amounts of CapEx and it'll reprice. But if you look at the great credit providers, very a public REIT, taking equity-like positions for credit-like risk down the capital stack mitigates that risk of a pricing reorientation or an interest rate spike or an inflationary spike. Because remember, when inflation comes, it's actually good for real estate because replacement cost becomes exponentially greater than where you were standing still. So it adds a buffer. But the credit markets, you can't feed your kids with residual pop on technology stocks that are producing no revenue, right? One of the most difficult things, I think, for all of us legacy players is that P&L doesn't matter anymore. Well, but it does matter because at some point in time, you actually need cash in order to fuel the system. So that yield producing lower down on the capital stack in capital-like instruments, and a company like Barry's, a mortgage REIT, which has the experience to pick and choose across those classes at scale and produce real yield with a residual pop down the capital stack, to me is a major play today.
Tom, let me jump in here. A quick question about whether or not COVID has changed anything. I mean, prior to COVID, when international investors look at the real estate in the US, they're looking at gateway cities, the likes of New York, San Francisco, Boston, LA. Has that changed in any way with COVID?
I think that, the colloquial experience is right, that everything has changed and everything is changing, and the work from home mindset is here to stay. But we can't build cultures. You can't build a culture in your operation. Barry can't build a culture of excellence in his operation by only Zooming or Teams. So eventually, to me, the sociology of mankind comes back and people want to be together, and this will be a memory and an ebb and flow, and we'll return to the median sooner than anybody thinks. That being said, right, the quality of life, kind of the COVID revenge that we're experiencing now, which Barry will be a beneficiary of it in his hotels, the travel and entertainment business will boom short term for what it is. People will be able to work and access secondary housing better than they ever did. But at the end of the day, I don't think things change that much. I think it just reprices itself. Will corporations go back to spending massive amounts of money on travel and entertainment and conferences where people are double dipping avocado dip with potato chips? I think that's going to take a bit of time. But the allure to life, even when the stimulus goes away, because as Barry was saying, I mean, Europe hasn't both he's in the UK, I'm in Europe. It hasn't opened yet. You have 350 million people. When this opens, along with China and along with the US, the boom is going to be incredible. So I think the rising ship continues to rise. What we all know is this ends at some point. There's an unforeseen intervening event. Some
I hate
macro.
that part, Tom. I hate that part.
We have a couple of minutes left. I just want to touch on specs. We have to touch on specs, right? Everybody's in on it, politicians, celebrities, you name it. Barry, I mean, you're a spec sponsor. What do you think? Have we passed spec peak, you think?
I hope so. I mean, I've done 4, and 2 have found their targets. One's closed, one's on its way to closing. I have a big one and a little one. I just did that last week, actually. It's fun for me. It's a way to diversify I own Star Property Trust, which is the mortgage REIT that Tom spoke about. And then for, I think, 12 years, I haven't sold a share. So I'm quite long real estate, but I know a lot of people, and it's kind of fun. My family office really runs the SPAC stuff, and I just coach. I think the market hates doing anything in the right amount, so it went to wretched excess. And if you could breathe, you could raise a SPAC. There was a financial arbitrage that was being created by the selling of a warrant for free that actually had value. So you're getting more than $10 of value. That was the arbitrage that created the SPAC boom, the SPAC 3.0, whatever you call this, because you could buy the IPO, sell the warrant as soon as it was float, and you create the security cheaper than 10. And your worst case is you got 10 back. And when the hedge funds figured that out, all hell broke loose. They would buy a security from anybody. It was basically a free option, and the alternative was cash, and so you could earn better than cash just on selling the warrant as soon as it was detached from the stock. People understand that that's what drove the SPAC market, the buyer side. We raised $1 billion in our third SPAC. We had $9 billion of orders, and we never saw anything like it. 450 accounts. So people who were slapping themselves on the back had nothing to do with that. But now the market is much more discriminating. There are I think there are 400 people lined up at the gates trying to get a deal done. People who the market perceives as good fiduciaries, they're experienced deal people. They know how to look at companies. They seem to be getting there's a trickle of deals getting done. I hope it remains a trickle. I doubt it'll remain a trickle until the SEC sort of tightens this process up, because the projections that are in these, there has to be someone saying they're reasonable, and because I think they're really misleading investors. Not that it matters. I mean, investors don't care. They're taking bankrupt companies like AMC Theaters to $25 billion market caps in this new Robinhood world, and Reddit and Market Bets. So people don't care. Clover Healthcare is basically a fraud, and it's trading at $16 a share, and it keeps going up. The more you say it's going out of business, the higher the stock goes. So the stock market is detached from reality, and I feel bad for my hedge fund friends, because it is. I don't know how I trade it. I mean, I have I invest and I don't sell. I don't. But I mean, my housekeeper is day trading and getting rich. So we should invest with him.
The bottom line is, you pick the athlete, you don't pick the stadium. Right? The difference between a very Sternlich sponsored SPAC and a Lordstown is 1,000 miles. So,
Tom, we need to wrap up soon, but it would be very remiss of me if I don't ask you this question. I mean, there's so much questions about, what Mr. Trump is up to. Give us a sense of where he is, what he's doing now, Tom.
I actually don't know. I'm a viewer like we all are, and I'm always cheering from the cheap seats for whatever president of America we have. I mean, Joe Biden is doing a heroic job in what he needs to do, right? That playbook was written for a long time. It was 4 years of suffering for the Democrats. And so there's no surprise in what they're doing, and hopefully that works out well. President Trump did what he came there to do. It caused some unbelievably great results across the world and caused a great amount of frustration. So I look at it differently. I think the difficult thing for America is the spread between the haves and the have-nots, and the difficulty that we have talking to each other with different points of view. So neither the Democrats or the Republicans or the Libertarians or anybody in the middle represents the heart and soul of America, right? The ability of a Barry Sternlich to start from nothing and become one of the titans on a global basis is American. It's due to that DNA and the freedom and beauty of America. And I think that this adversarialness between all of them, including President Trump, will end up being a good thing, because it'll force all of us as Americans back into our box and say compassion, conciliatoriness, a tolerance and a point of view. And what I hope for is that happens on a global basis. But it's unstabling to the world to have a Middle East policy carved in granite that evaporates in an instant and becomes a different Middle East policy. And this is the challenge, I think, for Americans, have consistency with its allies. So I'm hopeful for everybody. I don't know exactly what President Trump is doing, but I hope for him the best. And I'm a big fan and rooter for President Biden and the Democrats to do the right thing.
On that note, Tom Barrick, Barry Sternlich, it's been a pleasure. Thank you so much for being with us today.
Thank you.
Hello, everybody. I'm Yvonne Mann from Bloomberg Television, and I'm here with Adrian Chang. He is the Vice Chairman and CEO of New World Development. Adrian, thanks so much for joining us today. Of course, our panel is about millennial consumers. I just want to kick things off with a simple question. Who is the millennial consumer, and how would you best describe them?
Thank you, Yvonne, and thank you for having me today. There are over 4 billion millennials and Gen Z in the world today, and there's around 566 million millennials in China. They're the key driver of global consumption, and there's no different in Asia than anywhere else in the world, in my view. And there are many important, facets of a millennial and what drives them, what makes them stay ahead. I think the key differentiations are this. The millennials wear so many hats. They can be a /youth, a blogger, a dog lover, and young generation is easy to find a sense of belonging, but also easy to feel lonely too. So because they have so many hats, company needs to really understand them because they all want to be unique. So what we need to think about is to see what we share with them amongst the same values, and also what we are targeting. Which hats are we targeting? I think that's very important. Sure. Secondly is I think, all millennials are focused, especially in Asia, are focused in technology. So how does technology optimize their lifestyle and their livelihood? So technology is not what they used to satisfying basic need, but it's basically everywhere to bring their best experiences.
And we've seen your success in K11, your art malls. You just have a recent venture in the Pavilion Farm. This is one of your residential projects that's focused on sustainable living. Talk a little bit more about how much value millennials do put on sustainability and how they're fueling this trend.
I think sustainability is like a second nature to young generations, also a major factor driving new world core businesses, from residential to also commercial projects. So the most recent residential project, we call it the Pavilion Farm, actually broke 20 years sales record during COVID. So it actually broke the record in Hong Kong. And the majority buyers were actually under 40 and attracted by the unique urban farming concept. It is the first sustainability-infused residential project. So think about you're living there, but in the middle of the residential project, there's a big farm. You have an aquaponic farm, an aeroponic farm, and also a real urban farm that you can farm and eat. So for new generations, that's a very big attraction because sustainability is something that they care. And so from a residential to a commercial point of view, it's really the concept built in from design. And the brand DNA is also very important. You can't just put it as a marketing gimmick. It has to be part of the corporate's DNA. And we build more than homes, but communities that are sustainable and taking care of one's well-being, which is shown in all our projects. Another thing I think new generations are very look into is also sustainable finance. So we also launched the first sustainable linked bond for a property firm in Asia.
But aren't millennials making different lifestyle choices than baby boomers now? They don't necessarily want to own property. They rather spend their money on experiences, health and wellness. They're delaying marriage and having children now. As a property developer, how much confidence does that put on the real estate market if younger people aren't buying homes anymore?
We also rent homes, so if they're not buying homes, we're also renting homes. So they still need the facilities and they still need to experience a sustainable living style. But ironically, in Hong Kong, as I said, under a majority buyers, more than 60% of Pavilion Farm is under 40 years old. So they are actually buying. So they are actually owning apartments. But you're totally right. There are a portion of the new generation, Gen Z or the Alpha Gen, how you define them, they actually just want to rent and they want to focus on experiences and also on knowledge capital. So another trend is that they want to accumulate a lot of knowledge. They want to feel good about themselves and also they want to contribute to the society.
All right, we're going to have to leave it there. But Adrian Chen, thank you so much for joining us from New World Development. Thank you.
Thank you.
Well, we are truly going around the world when it comes to looking at global real estate and what's going on, some of the trends. Sheikh Khalid, Bruce Flatt, and Rob Spire, thank you so much for being with us. This is what I would call a dream team when it comes to talking real estate. What I want to start with is the truth about what's going on in real estate, because there have been over the past year a lot of conversations about doomsday scenarios, about people leaving major cities, a lot of working from home or hybrid working, so we won't need as much office space, about people moving away from gateway cities. So I want to get to the truth of it. Bruce, let me start with you. Is it a case that we're not going to go back to our office? Or if I look around New York, it feels like a lot of people have already moved back.
Look, it's life is about phases. People have to adjust. They're all coming back to the office. It's just inevitable. And but people have to do it in phases. They thought they couldn't come back. Then they thought they were going to partly work from home. Eventually, they're all going to be back to the office. We're seeing it everywhere in the world. You can see it in the cities that are reopening already across the world. And it's just happening at a slower pace in some places. But look, everything's opening up where the vaccines are working.
Sheikh Khalid, come on in on this. Do you agree you're seeing everybody come back, or do you feel like that there might still be some dramatic changes when it comes to real estate generally?
I do echo what Bruce said. I think in phases, as we have planned also here in Qatar, many of the companies, agencies, organizations are coming back into phases, and I see with the vaccine, people getting vaccinated, even a larger pool of people getting together in terms of meetings, events, what have you. I think we cannot get away from the concept of the workspace. The concept of workspace is for many occupier is to pool talent and to promote collaboration and innovation. So this concept we see in Qatari DR, where I am a chairman of, we don't see a change from that. I think we're getting back to normal. I think as a growing company like Qatari DR, it's important that we maintain the attracting talented people, and in the same time, as a growing company, we are developing and training national as a successor for the future, and we cannot do that remotely.
Rob, is it 3 for 3? Do you agree that people are coming back from the office, or does something change a little bit in terms of how we look at the office space, maybe how we use it or how much we use it and where we are using it?
Companies are really struggling to define what a hybrid workplace means and how to implement that in an equitable way. Does it mean that nobody works Mondays and Fridays? Does it mean, as one big company's doing, you tell people which 3 days they come to the office based on a computer algorithm? Do you give every employee their own choice? How does that work? So I think companies' approaches have been very fluid, depending on seasonality month by month. And it has been a real struggle if it's not remote or in the office, and it's a balance of the two, how to actually execute. But I'd give you a fact point from our kind of on the ground experience. We were lucky enough to buy a building in Sunnyvale a couple of months ago at a 50% discount to the pre-COVID value. Within 30 days of closing, we have 2 tech companies who are looking at potentially taking the whole campus. Now, 6 months ago, the whole world was writing off the Bay Area. Everybody was moving out, moving elsewhere. And the facts on the ground are most of the big tech companies have added extraordinary numbers to their workforce, and they need places to put them. Nobody's making the bet in actuality that they're not bringing people back to the workplace.
Well, that's what I want to get to and kind of make some sense out of, because we've done a lot of stories, certainly here at Bloomberg, about people leaving Silicon Valley, that the big tech companies are saying you can kind of work anywhere. Bruce, who is it that's going to be in demand for office space? Is it the same as it was pre-pandemic in terms of what we see post-pandemic? What signs are you seeing?
Look, I think the one thing that people have forgotten about when they think of office space is normally workforces, the GDP of the world grows, and you need more space to house people. And what happens when you have a slowdown is that nobody builds buildings. And there really hasn't been anything globally launched for 18 months, which means that this the amount of buildings coming on is just getting less and less. And over time, what you're going to see is demand come back and the amount of supply diminish, which means that you're going to have a whole cycle start over again. And our view is that this is very positive for real estate longer term, and we're continuing to invest globally. And you can see it in each of the markets that open up. You start to see cap rates come down because people understand that the offices are going to be full again. And if you don't understand the business, or people aren't in the business, it's maybe hard to understand. But that is really what's going on at the ground level.
Sheikh Khalid, what are you seeing? Like the other two on the panel, you have exposure, obviously, to the office space. Lusal, I think about your massive development that you guys have been working on since 2005. What are you seeing in terms of office demand? Who needs it? Who doesn't? Because there are certainly lots of stories about, open office space in Doha specifically.
Well, I can rephrase it in macro and micro. If I will talk macro, I think the office space demand will continue, especially for big corporations, technology firms, as said by Rob, and also for the professional services that rely on a large talent pool and looking for also best locations, best space. If I talk about micro here in Qatar, we went through I think a surplus of office space because it has to do with the demographic, with the planning, what have you. But I think, but that's also has a benefit of reducing the cost per square meter, which is also encouraging tenant to move in and looking also for more of the smart cities, I would say, or smart offices. That's where the technology is being upgraded and has more sustainable and well-being location for the employee to move in. So basically, best locations, best offices will remain as a high flyer.
Sheikh Khalid, foreign workers are so important to Qatar. We know that. Are you hopeful in terms of, immigration policies? Are you counting on that and really changing demographics to help also fill those buildings and the demand there?
Well, definitely, and we've seen a change on the policies for immigrants to move in and to give more of leverage to the business here in terms of the doing business or residency. Definitely, that's helping certain cities, certain location within the state of Qatar and within Doha, and we've seen that going toward the right way, so to speak.
Bruce, I know gateway cities are certainly, on your radar, and you still see strength in gateway cities. Is there anything to the argument that some of the secondary cities, because of companies that do offer now as a perk kind of flexible working, that we will see kind of more investment going into those secondary or tertiary cities?
Yeah, look, all of them are all of the above are good. There are smaller cities that are highly attractive, Nashville, Austin, where people want to be and they're growing. But just to put it in perspective, we're building a major complex in downtown Nashville. It's office, residential, retail, a big mixed-use development, but it has 400,000 square feet of office. We ourselves own 60 million square feet of space in New York City. So it's just the quantums. And as Rob said earlier, to get the people, and as Sheikh Khalid said, to get the amount of numbers, you need to be in these big cities. So Facebook, Google, and many of the tech companies are in New York City because it's the only place that they can get the mass of talent. And that's not to say that Nashville isn't going to be important, but it's just the quantums are different.
Bruce, while I have you, I want to talk a little bit about retail specifically. You guys have big exposure. You bought GGP back in 2018. The timing on that, did it cause you pause, certainly over the pandemic year?
Look, we started buying it in 2009. We bought it four parts of it, and the last part we completed in 18. So, but yeah, look, retail was not great when they shut down your business and it goes to zero for a couple of months. It's not fun. But if you take it today, numbers are coming back strong. If you have great centers in great cities, people are strong, and actually sales in many of them are above where they were pre-pandemic. So. Retail sales are coming back, and yes, there was a little bit of a pause, but those that were well-financed, just like every piece of real estate in the world, those that are well-financed live through these periods of time, and we're all trained to do that in the real estate business.
Right. And my understanding, Bruce, is that you recently did some channel checks, and you were checking out some of the malls that you guys saw that you own in the United States, and it was busy.
It has been reported that we toured many of those centers across the U.S. recently, and it's amazing the traffic that are coming into retail centers. Now, some of the urban centers, in fact, are the ones that are the most hit just because offices haven't filled back up yet. But we take great comfort from we have a mall in Seoul. It's underneath two office buildings that are now virtually 100% occupied with people, not just leases. But the mall underneath is full. And so where things are opening up and vaccinations have occurred, you are getting you're getting traffic coming into both office and retail.
Hey, Rob, talk to me about something like a Rockefeller Center, right? Which is so, having worked there over my career, it's a place where there's lots of tourism, it's multi-use. I mean, all of you are so much, it seems to be one of the significant trends when it comes to real estate, these multi-use properties. What are you seeing in Rockefeller Center specifically?
I mean, look, if you take Rockefeller Center as a microcosm of New York City, the difference between May 1st and June 1st was like watching a flower blossom. And the amount of activity, the amount of people coming here to eat, to shop, to go to our observation deck, and yes, to come back to offices, the difference in 1 month has been pretty extraordinary. And you're seeing that play out across New York City, in the parks, on the streets, and in real estate. I would also add, if you look at retail is a very small segment of our business, but if you look at China, where people are back in the office and where domestic consumption has been stimulated by COVID because people can't leave the country, so they're shopping more domestically, they're traveling more domestically. Our couple of shopping malls in China are performing better today than they did pre-COVID. So you hear a lot about the negative news in commercial real estate. You hear less about the cohorts like life science that are performing extraordinarily well, where demand has been accelerated by COVID. You hear less about cities like Austin, where we bought 2 buildings. They were empty when we bought them. While we were in contract, we leased both up. So there have been great opportunities during this period. We've done more than $12 billion of deals globally during COVID. And we think they're going to be some of the best investments we've ever made.
Well, talk to me about deals and where money's going, because I think about something like the hospitality industry. Sheikh Khalid, you guys certainly have a lot of exposure throughout the world in terms of hospitality. Are you finding new opportunities because of some properties that have certainly been beaten down, depressed because of the pandemic?
Well, to be honest with you, we work with our partners. Locally, we have not looked at opportunities, but abroad, yes. And you are talking to our partners here, both of them, and we always work with them in order to find the best opportunity. We build on and capitalize on the relationship that we have built over the years, and I think the U.S. is a great place for investment. And I'm happy to hear what Rob have said about, occupying or buying post-pandemic or after the pandemic those good deal of offices. But I think this is an area maybe we need also to sit and chat and talk about it. It's a great opportunity. But to be honest with you, locally we have not looked, because we are focusing mainly in Al Wasail city. We're building facilities to cater for the for the World Cup 2022. And also we are marketing the boulevard. This is a commercial avenue that we have built, and it's really is doing great in terms of the attracting, let's say, people to rent, and variety of people. And this will be one of the kind of a commercial boulevard built in the state of Qatar, close to the Al Wasail Stadium, where we'll have many of the games taking place in. And really, this is where we are focusing in Al Wasail right now. As you know, that Qatari Diyar went through a restructuring of itself from organization-wise and from investment, and we continue to focus on UK and US market with our partners. So we haven't really secured any opportunities inside Qatar, but as I've said, we are concentrating on what we have in hand.
Sheikh Khalid, one quick follow-up on that. The World Cup, massive for Qatar, and I understand that there's a big focus in the development toward that. What happens to demand after the World Cup?
I think a great infrastructure has been built in the city, in the city itself, with all the regulation that has been put in place in terms of the tourism, attracting tourism to the state of Qatar and to Doha. Also, many events that's coming in place, which I don't have really in mind, which will make Qatar for future events most cost effective when to host any future events in any future events in the state of Qatar.
Bruce, in terms of new money, committing new money, where are you looking? What types of projects are you looking to do right now? Where do you see the opportunities?
Look, when you have a $225 billion portfolio of real estate, you're doing everything. And we've been buying a lot. We've been selling a lot. On the growth side, we've been doing life science. We just are committing to a portfolio of life science in the UK. On the value side, we've been buying office in city centers. And we just bought $750 million of properties in Washington. We've been buying in New York. We're buying in London. We just committed to a large building in the city. So on the value side, we're finding opportunities to put money to work. But on the growth side, which are often smaller dollars, there are still significant opportunities. And the real thing, and we haven't talked about it here, Carol, but the real thing is interest rates have gone to zero, and they look like they're not going up in a substantial way for a long period of time. And as a result of that, and once the clutter clears from real estate, and as Rob said, the shift has changed a lot in the views of real estate. Once it takes its final shift, people are going to realize that these are among the great investments in the world to own.
Well, Rob, do you agree with that in terms of, I love that you went there, Bruce, in terms of interest rates, because it's certainly something we debate and talk about a lot. Do you agree rates are going to stay low and that provides incredible opportunities?
It looks that way, but there are obviously some inflationary pressures that are suggesting that while rates may be low for the next couple of years, they'll gently rise to prevent a run on inflation. While we haven't had an inflation spike for a few decades, I think there are enough of us who remember the 1980s and double-digit inflation that's obviously something we're preoccupied with. I agree with Bruce. There are extraordinary opportunistic things to buy in major cities around the world. We've been active during COVID in Paris, in Washington, D.C., in San Francisco, in London, and people just selling off real estate at 25, 30, 40% discounts. Whereas if you had a long-term view of things reverting anywhere near where they were pre-COVID, these are generational buying opportunities. I also think there are growth segments like life science where we've been extremely active, like prop tech, which we haven't talked about, but we've been very aggressive both in early stage investing and also a couple of SPACs that we've sponsored. Technology is finally transforming the real estate industry, one of the last industries that kind of opened itself to innovation and disruption. And now that's become an extraordinary force and investment opportunity. So I think the things we've been doing have ranged from deep value investing and also investing in certain real estate pockets that are seeing enormous growth right now.
Rob, you mentioned technology. Expand on that. And specifically, what does that mean? And I'm thinking about the Bloomberg audience, the global audience. What do they need to take away from that?
Very little changed about our industry other than really the way you capitalize buildings. Very little changed about our industry for many decades. And I think most people in real estate thought their responsibility was to provide four walls and a floor and in return get a rent check. And that was kind of the contract with tenants. And you saw your tenant every 10 or 15 years and renegotiated, and everything was very transactional. That has changed now, whether it's software or hardware solutions or new, more flexible models. Our industry is going through this enormous period of disruption and change, which if you position yourself at the forefront of that is a fantastic opportunity to do a better job serving your customers and investors, and also a great investment opportunity if you position yourself not just as a real estate investor, but also an investor in the technologies that are changing real estate, which is what we've done both in creating a venture platform for early stage investments and also sponsoring SPACs that are able to take growth stage companies into the public markets.
Which is a big change. Sheikh Khalid, I want to have you address something that Bruce and Rob talked about in terms of interest rates. What are your expectations, when it comes to the global rate environment and the opportunities it presents for the real estate community and investing?
I think I echo both Bruce and Rob. I think we will enjoy a low rate interest for a few years to come, maybe a couple of years, maybe more. And it's an opportunity that we see that investment opportunities which will help also in terms of investing because of the low rate interest. Also refinancing when it comes to our position, Qatari DR, we are refinancing our facilities, facility loans with taking the advantage of the low rate, but they are opportunistic. And I think globally, which is really a time to go for investment and enjoy that opportunities.
I want to kind of turn the tables on you all and see if you have a question for one another. Sheikh Khalid, do you have a question for Bruce or for Rob here?
My question is, how do they see, would they invest, talking about investment on offices and office space, how do they see the appetite going further, especially in the major cities? Do you see people might go away from major cities and go to the hub of the social hub of the big cities and invest more? Or do you think the major cities like New York, London, and Tokyo, Paris will maintain their position post-pandemic?
Bruce, you want to take that first? I think I know your answer.
I'm going to set Rob up here. How about that?
Deal.
Major cities are major cities because transportation and because of that people want to be near others. That's why they've always existed, and that's why corporations seek those cities. Rob can give whatever answer he wants, but he should tell the story of all the companies that left New York City and went to Stanford, and how many stayed there, and where they are today. And I think that's instructive of as an answer to the question.
The ball is in your court, Rob.
Now, Bruce, thank you for that. I remember being a kid in the 1970s, and watching my father and grandfather struggle to keep our properties leased because so many conglomerates were moving to Westchester and Connecticut. And most of those companies came back within a few years or went out of business because they couldn't attract the same talent once they moved to the suburbs. In my lifetime, I'm 51, 5 times, and I've spent my whole life in New York, 5 times people have been predicting the death of New York and the death of cities. And every time they've been not just wrong, they've been profoundly wrong. And through crisis, New York and other big cities have innovated and made themselves better. And that's been happening not just for 51 years, but for hundreds of years. And again, if the 4 of us were together in New York City right now, and I'm sure the same would be true if we were together in Doha, you would see an active place where people are super happy to be and they aren't going anywhere. And you want to look at the Bay Area, unless Stanford is moving, tech companies aren't moving. Yes, they're going to hire talent in places like Austin and Bellevue and Toronto, but they're going to stay headquartered as close as they can to Palo Alto because that's where the great talent is produced. And if you were to want a roadmap as to where companies are going to grow, you want a roadmap as to where the talent is. And that talent is going to continue to convene and congregate in big cities like New York.
But even though companies are increasingly saying as a perk to hiring, and we're hearing this in massive surveys, employment surveys, that now a perk is you can work anywhere you want, that is going to, we know people are leaving jobs if they don't have that flexibility. That doesn't change things at all?
You're also having companies say that if you leave, your salary is going to be adjusted to reflect the cost of living where you're moving to. So I don't think we're going to fully understand those demographic trends until you see where people end up on the other side of COVID. And again, if we were together and you looked outside my window or you went to Central Park, I don't think you would be doubting the future of New York. And the same would be true if we were in Paris, London, Tokyo, Toronto, or Doha.
All right, just got a couple of minutes left. It has been quite a 12 months, 15 months, and we've had lots of conversations about real estate. Some final thoughts, Sheikh Khalid, for our audience about what they need to understand about where commercial real estate, residential real estate, where it's all going, and the impact of the pandemic.
If I speak on behalf of Qatari Diyar, I think we look for opportunities, and so we look for commercial, offices, retail, residential, hospitality. So there is a right opportunity. I think we jump on it. I think there is a great opportunities. Right now, people need just to take the risk and understand it well. But Qatari Diyar will invest in all these, what I have just mentioned, areas where we see the opportunities is the right way to do.
So similar in terms of pre-pandemic. Bruce, come on in on this, because I do wonder, like logistics centers, data centers, is that more attractive? Is there something that's more attractive now that we've gone through the pandemic?
What Sheikh Khalid should have said about his residential is he had some projects in London that he could sell to people that are listening to this call. But first, but I'll do his pitch for him. Look, here's what I would say. There's no doubt the one sector, and we've been investing significant amounts of money in it over the past 7-8 years. Data centers didn't exist really 15 years ago. There's enormous amounts of money going into the data center business, and it's going to continue for a long period of time. But when you look at the amount of capital in that area, or in life science, or in some of these niche areas, they're phenomenal investments, and they have been great investments, and they will be in the future. But they're relatively small dollars globally. And so yes, they are great investments, but the true value investments today, and where big money can be put to work, and where significant value can be made is buying in these great cities today, when people have a different, more pessimistic view of them.
Rob, save 30 seconds for you. Final thoughts in terms of the outlook of where commercial real estate goes.
Stay nimble, stay flexible, stay liquid. And if you have a global purview like we do, like Brookfield does, like Qatar DR does, you're going to find great opportunities in commercial real estate.
Gonna leave it there. Rob Spire in New York, Bruce Flatt in London, Sheikh Khalid in Doha. Thank you so much. Really appreciate your time. Be well.
I'm Heidi Stroud-Watts, and we're here to talk about smart, sustainable cities in the post-COVID era. And for that, I'd like to bring in someone who is considered a trailblazer in the field. It is Dr. Jeffrey Chair, who is the head of Sunway, one of the largest conglomerates in Southeast Asia. So wonderful to have you with us. Talk to me about your vision for smart, sustainable development post-COVID. What's changed compared to a year or so ago?
Well, thank you, Heidi. Of course, it is an honor to join you virtually at this inaugural Qatar Economic Forum. Yeah, talking about sustainability, sustainable city. 40 years ago, where we are today in Kuala Lumpur, what we call Sunway City, now was full of abandoned mining pool. There was nothing here, only mud, sand, and gravel. But while others saw this as a moonscape, I envision something different. Instead of clearing green fields, I decided to rehabilitate this brownfield and build an integrated and sustainable city. And I must confess that when I first came up with this idea, several bankers, a lot of them, in fact, dismissed me outright when I sought loans from them. Even my friends thought I was crazy. But we went ahead. Sunway City Kuala Lumpur now houses educational institutions, commercial entities, an international renowned medical center, retail, leisure and hospitality outlets, and residential neighborhoods. And today, the city now serves a vibrant community of more than 200,000 people living, studying, working, and playing in a safe, connected, and healthy environment. And we are not finished yet, of course. For instance, we are now integrating technology more deeply in our operations to help reduce the township's carbon footprint. And we are also constructing an arts and cultural center to enhance the quality of our community, quality of life for our communities, and nurture well-rounded young talents, which I am very passionate about. Yeah, and this is how I would put it across.
And this is obviously, the development is your crown jewel, if you will.
Yeah.
Can it be replicated? Is it scalable?
Oh yes, in fact, we are building 3 more townships in Malaysia. All of them are in Malaysia because it's my where I was born, and I'm very loyal to this country, and I hope to build more of this kind of township. Of course, what we have built, it is the ecosystem, both physical and social. And at Sunway City here, we have put in place the fundamental building blocks, such as quality education, healthcare, world-class research, commercial entities, and the presence of educated young talents. It is, in fact, a very holistic environment which combines intellectual firepower, applied research, creative energy, and entrepreneurship mindsets, almost like Silicon Valley, I would think.
Mm.
The presence of 3 research-intensive university and commercial entities, and our medical center has turned our Sunway City into a living lab and a testbed for innovation. And I believe to be the best, I truly we need to learn from the best and work with the best. In this context, we have established partnership and collaborations with world-renowned institutions such as University of Cambridge, Harvard University, Oxford University, and MIT in Boston.
I was going to say the pandemic has really exposed vulnerabilities in so many different ways, right? Does it also create opportunities for change? And in what ways do you see that?
Well, I think now, of course, this township that we have here was very vibrant. And of course, now we have the lockdown in Malaysia. And, with this pandemic, it helped us springboard the online learning. And I believe that into the future, we may have to do a hybrid, online and physical, So I think that if not because of this pandemic, people may not put so much effort into online teaching. And I believe that this will augurs very well into the future, because now the technology has more or less been upgraded to a level where students can learn online. And my belief is it needs to have physical, because I personally would prefer when I call for meeting, online is not so my ideal type of situation, but I would like to have a hybrid, some online, some more physical, to have personal interaction with our people.
You've said that it's not just up to governments and policymakers to reach these sustainable development goals. What would you like to see companies in the private sector doing more of?
Actually, the real question is not, why sustainability is important to me, but whether we can continue to go on as we are, given the state of the planet and its people. Now, our commitment to sustainability and our three core values of integrity, humility, and excellence have helped Sunway become one of the region's leading conglomerates. And here, Sunway sustainability is also emphasized in our vision statement, which is to be Asia's model corporation in sustainable development, innovating to enrich lives for a better tomorrow. We are demonstrating that sustainability and profitability can go hand in hand, and that we can all do well by doing good. Heidi, my personal motto is I aspire to inspire before I expire. And I hope what we are doing here at Sunway will inspire other corporations in the region to adopt sustainability as the default choice.
Dr. Chow, thank you so much for your time. We really appreciate it.
Thank you.
We hope you're enjoying the Qatar Economic Forum and find it informative. We'd like to thank our underwriters in Qatar, Media City, the Ministry of Commerce and Industry, and the Investment Promotion Agency, Qatar. The past and the present meet in one man. He is the living embodiment of Qatar's beginnings and its rise to its current international status. His life story begins with pearls. Meet Hussein Al Fardan, the man who has seen it all, done it all, and keeps on doing it again.
They call it Ashad.
Hussein Al Fardan knows the secrets of the sea and the beauty that lies beneath.
Everything, all kind of pearls.
He is a rare witness to the tides and times that have transformed Qatar. Surrounded by jewels, this 88-year-old legendary businessman is himself a gem of his nation. So what makes a good pearl?
Has to be perfect round, has to be clean, no dents.
We met in his pearl gallery over coffee and fresh dates as he recounted being a young boy out on the waters diving with his father.
I born with my father. He is deep in this business, the only business we have in the region, the whole region.
The entire economy depended on pearl diving at the time, and sales mainly to Indian traders. How has Qatar changed? How has the country changed?
A lot, but because the income increase, we depend before on the pearl. Pearl is dead. Then we luckily got oil. The economy starts growing. Up to now, you see what we are. And all the divers left the diving and went and worked with the oil companies.
The discovery of oil and gas, combined with India's own pearl diving initiative and Japan's move into cultured pearls, killed the pearl diving business in Qatar. As the country transformed, Hussein Al Fardan, the entrepreneur, built successful businesses in jewelry, hospitality, motorbikes, and marine services. He has seen the ebb and flow of wars, regional tension, economic strife, but sees opportunity even in hard times. In 2017, Saudi Arabia, the UAE, Bahrain, and Egypt imposed an embargo against Qatar, which was lifted earlier this year.
The blockade made us depend on ourselves. In the vegetables, we depend on ourselves. We've grown up maybe 100 times than what we used to grow up.
He is pragmatic about relations with Qatar's neighbors.
Trust is not easy to build when it's cut, but we have to be wise enough to see every country in the world, they have some differences, they have some problem, but they come over it.
All these years later, a perfect pearl still brings excitement.
Look at this. Perfect round.
Yeah.
Pinkish.
Pinkish. I see it.
The best of the best.
How much is this worth?
And it is over $10 million.
Over $10 million for this?
Yeah.
It's incredible. He sees potential in the future of Qatar based on its heritage and its link with the sea.
Hello and welcome. I'm Malika Kapoor, Deputy Global Editor of Bloomberg Live, and I am delighted to introduce our next guest. He is the Chief Executive Officer of Valentino, Jacopo Venturini. Jacopo, thank you so much for joining us. You took on your new role as CEO of the company of Valentino on the 1st of June, 2020. I think it's fair to say that the first year threw in a couple of surprises for you. Tell us, what was the impact of the pandemic on Valentino, on the business, particularly with regards to store closures, and where do you stand in reopening your stores now?
Well, first of all, it's a little bit complicated to tell you about the opening and the closure, since it was an on and off from the beginning. As you know, everything started with the lockdown of China, and then in February, and then in January, February, and then it starts Europe, and then we have been to a situation of open and close during all 2020, and even in 2021. In Europe, for example, just to give an example, from mid-December to mid-April, England was all closed, for example, until mid-May. From, again, mid-December, Germany was entirely closed, Italy was on and off. Nowadays, there was a moment in 2021 where, in 2020, by the end of March, we have like half of our store completely closed. Mm-hmm. Nowadays, we have, everything is quite open except for what we call Southeast Asia, so Singapore, Malaysia, and Australia, and also Japan. They are in a situation of on and off lockdown.
Well, what you did, and what many of us have had to do, is turn to digitization, isn't it? And you've incorporated a very heavy online strategy. Going forward, how important will online sales be, you think, compared to, say, physical store sales? And how important will your strategy of moving toward the digital future be going forward?
Well, from the very beginning, we try to, let's say, not to get by this situation, but to find the way to make a very difficult situation into opportunities. So technology was very important to make us being faster, smarter, but even closer during the pandemic. And just to give you an example of what we think about being closer and adding a human touch to technology that can, of course, enhance the relationship with the final customer, we have humanizing the digital experience with several ideas. For example, one was We Are Not Really Stranger, that we launched in January 2021 during, of course, the pandemic, which was a card game based on intimacy, in which our community can entertain and interact by discovering each other's personalities. The first video of this recorded 5.5 million organic views. On top of that, during the pandemic, we entertain our community on Instagram and other digital with the world of literature, for example, with book by Elsa Mojimbo, The Alphabet for Kids and Adults. And as a first time in contemporary fashion advertising, there was a literary campaign with Donna Tartt. And to bring our community together. We also did in the world of poetry, we launched online reading with Rapu Kaur, and on the music scene, we went live concert with Profile, like Alicia Keys. So
that's right. You've had a very busy year, yes, in terms of your digital strategy. But I wanted to switch our attention to sustainability, and I know you're a big advocate of that personally. And as far as the brand is concerned, fashion is one of the most polluting industries in the world, but Valentino has developed a reputation for being a green brand. If you had to pick the one step you all have taken towards sustainability, what is the one decision you've taken as a business that's helped you be much more sustainable than you were before?
So let's say that, first of all, our mantra is very much to preserve and to give back. Give back. I think that one of the first very important big steps that Valentino made was in 2013, which was kind of pioneering with other few brands. And when Valentino joined the Greenpeace Detox Solution Commitment in the mission to eliminate all the dangerous chemical from our supply chain, and agreed on zero deforestation commitment project to help to protect our life-giving waterways and rainforests. As a result of this, we have reduced approximately by 63% of our chemical substances in the production. Then, of course, as you know, we just communicate that we are going to be fur-free from the end of 2021. in terms of production. And from spring,
summer, just to announce that you're going for free. That is a huge step. But a lot of people would ask you, you've decided to go for free, but of course you're still using leather. So can you truly be a green brand if you continue to use leather?
Well, I think that you cannot decide to be a green brand one day from the other. It's a process, and we are committing to be as sustainable as possible, because we truly believe that this is the only direction that we can grow. But at the same time, you're not becoming fully sustainable on one leap. You're going to do it step by step. So we are going alpaca free, for example, from spring summer 2022. We are working on the viscose, and we are already in a virtuous viscose supplier for 70% of our production. We have launched, and that will be in the store, our iconic Deacon, which is what we call open for Unchange, which is totally recyclable. And we have a plan to give back, which I think it's a very important element. Just to give you an example, plant trees wherever we are in order to give back to the planet what we took off. And another example of that is the campaign, charity advertising campaign that we made during the pandemic, based on empathy with our friends of the house. Everybody gave their fee to Hospital Spallanzani in Rome, which is the Italian hub fighting against COVID-19. So to me, the concept of giving back, it's very important.
In 2018, there was a lot of controversy over Burberry because they burnt their excess stock. What do you do with your surplus stock?
First of all, we don't burn, which is something very important. And then, of course, nowadays we are really thinking on upcycling the product. So there are processes in the company of brainstorming on how to upcycling the product. It's something that, of course, it's something very new, and we are thinking about that, and we are working very seriously about that. And I'm not ready to tell you how, when, and in which way, but definitely it's something that we will do.
Okay, well, we're going to look forward to hearing more from you about that when you're ready to tell us. Jacopo Venturini, thank you so much for your time, and thank you for joining us today.
Really a pleasure for me. Thank you to you. Thank you.
Sustainability, as we know, has been such a key issue, really highlighting in the past few years what a priority it's been for companies. No better person to discuss this than Roberto Marques. Of course, we know him as the executive chairman and group CEO of Natura & Co. And Roberto, wonderful to have you, because Natura & Co. owns companies like Avon, Natura, The Body Shop, Aesop. So it really makes you one of the largest cosmetics companies in the world. So you have a really key handle on sustainability. What are your plans to be net zero? What are your specific goals?
So first, Taylor, thanks for having me. Great to be with you. Listen, last year, we made a very important commitment as part of Natura & Co., which are the 4 brands that you mentioned. We unleash what we call our 2030 commitment to life. And within that, one of the key pillars is actually to achieve net zero by 2030. And just as a perspective, that is 20 years ahead of the commitment from the UN, right? And most important, this is also related to what we call scope 1, 2, and 3, which also encompass all the end-to-end supply chain. So a very daunting goal for us. This is one of the pillars. The second really talks about social inclusion and diversity.
And the third pillar talks about, how we really drive circularity and more regenerative ways of really doing business. So on the net zero, we are really trying to understand the importance of the direct emission, which actually represent less than 10% of our scope, and the indirect emission, that is probably the bulk, which is 19 times more than the direct emission, especially on scope 3, really working through our supply chain, through our partners, especially in the areas of packaging, ingredients, distribution, which are really the key elements. So a lot to be done, but we're very excited with the progress and how we're really partnering with the entire network here.
Talk to us about that packaging and the plastics and really that regenerative process that you described. Is the demand coming from consumers? Are they coming to you and saying, we want this?
Yeah, it's very interesting because the way we like to think is that consumers are actually citizens. And we are seeing more and more the citizen, the civil society, and our customers becoming even more involved. They want companies, they want solutions that all think about the environment, the social aspect. And for that, our commitment is to achieve 100% of our packaging, either reusable, recyclable, and compostable by 2030. And there are some very interesting examples already. One of them, Tyler, is our refuel stations that we are implementing across our Body Shop stores, where people come with the aluminum can and can fill their products, their favorite products, and then clean in a way to really create a more sustainable and recyclable ways of really consuming some of the cosmetic products. So really a lot of focus on reducing plastic, driving circularity, a more regenerative way of doing business. And the good news is that we are seeing consumers much more engaged and wanted to really work with companies that have that top of mind.
Another pillar that you mentioned, of course, is social inclusion, and particularly in the Middle East and, of course, worldwide. What are you doing within your company to promote an equal recovery across gender, across race, particularly as we come out of this pandemic?
Yeah, we know that the pandemic hit actually disproportionate women in terms of losing jobs, actually increasing domestic violence. So we're very committed to actually help there. We're committed to achieve at least 50% of gender balance in terms of our management above, and also working to achieve 30% of underrepresented population as part of our management by 2030. So a lot to be done there, but it is one area that we're putting a lot of focus and making sure that we have the right fiber of society represent in our own workforce.
We just have 30 seconds quickly. How important are all of these goals that you've just described to the future growth of the company?
Listen, we like to say that there is no plan B, right? We needed to embrace that because we can run companies in a dead planet, as simple as that.
Thank you so much. That was Roberto Marquez, of course, Executive Chairman and Group CEO of Natura & Co. Thank you so much for your time.
Thank you.
A shared destiny defines the health of the planet and the health of its people. The role of a health minister has expanded into territories which were once the preserves of other officials. We speak with Her Excellency Dr. Hanan Al-Kuwari, Qatar's Minister of Public Health, on addressing the challenges in this mission.
We are here with Her Excellency Dr. Hanan Al-Kuwari, the Minister of Public Health for the state of Qatar. Thank you so much for joining us. Now, I want to ask you about a question that's been in the news. Have you seen any evidence to suggest that the source of coronavirus, COVID-19, was a lab leak?
There has been a thorough investigation done by the WHO, and that investigation does not indicate that it is a lab leak. So we will see. There's another phase of investigation. So we will see more as we proceed.
Now, Qatar purchased Pfizer vaccine, Moderna vaccine. Those were some of the first vaccines to roll out quite quickly. Why target those vaccines specifically back in the fall when you kind of struck those deals?
Yes. Well, from the onset of the pandemic, it was very clear that for us to get out of the pandemic, we need to vaccinate our population, and there needs to be a global drive to vaccinate. So His Highness was very clear in his direction. He asked us to make sure that we provide or procure the most effective and safe vaccines. So we did a thorough study of the vaccines that were available. At that time, they were still at clinical trials. And we found that Pfizer and Moderna were both promising, as well as AstraZeneca. And we sort of bet on these. And we worked very closely with the pharmaceutical companies that produce these. And we were able to secure enough quantities to support our population and to drive global and to support the global drive on vaccination.
Yeah, it's interesting because those mRNA vaccines turned out to come out with the highest sort of effectiveness. So it seems like a lucky or a smart bet. Let me put it that
exactly.
way.
It was a smart bet, and it's also an indication that the new innovative technologies are really important, and there needs to be a continuous drive to support innovation in the pharmaceutical and medical industries.
Yeah, absolutely. Right now, there are restrictions that are targeted to unvaccinated members of the population, whereas vaccinated members can do a bit more. How long do you see that persisting?
Well, as long as globally the level of vaccination has not reached the level where we can say that the virus has been suppressed, it will be important to protect the communities, whether it is by imposing restrictions or whether by imposing additional tests. And testing is a very safe way of opening businesses when you have areas that are unvaccinated. So with vaccination, that reduces the needs for continuous testing. But with unvaccinated population, it is really important to continue to test at such regular intervals.
I guess will you end that when you reach herd immunity, perhaps?
Yes.
Okay.
Well, we hope so, because we have the evidence now that the vaccination does reduce significantly the spread of the virus. However, it does not totally reduce the spread of the virus. So what it will look like after, in terms of testing, global testing policies, post-global herd immunity, is still something that is being worked on. But we're very optimistic that, inshallah, with most countries reaching a sufficient level of vaccination, we will see less and less testing, less and less restrictions, and more opening up of countries and economies.
I want to ask you a slightly different question. You've had a very important role during this crisis, and you happen to be the only woman on the Qatar Council of Ministers. What initiatives are you getting behind? What are you pushing? Are you championing right now to improve the rights of women, the standing of women in a country that is admittedly has a patriarchal system?
Yes. Well, for starters, I must say that His Highness Sheikh Tamim bin Hamad and His Highness the Emir Father, Sheikh Hamad bin Tamim, Hamad bin Khalifa, have been the biggest supporters of women and women's education, empowerment in Qatar. As you can see, Qatar has one of the largest number of educated women. There are more women graduating from universities than men. There are women working in very important sectors across the country. And
including yourself,
including myself, indeed. And Her Highness Sheikha Moza, Her Excellency Sheikha Hind, and very strong, powerful women across the country. And also, don't forget, as a health sector, the majority of the health workforce are women. They're nurses, they're doctors, they're lab technicians. So I feel in very great company from top to bottom.
Fair. But anything specific you're pushing, like an agenda item that you want to see?
Well, in terms of empowering women, the rights of children, the rights of people with special needs, these are very important agendas that are discussed regularly in cabinet and at the cabinet of ministers. And these are important agendas for me as well.
Dr. Hanan Al-Kuwari, thank you so much for joining us. Dr. Hanan Al-Kuwari, the Minister of Public Health in the state of Qatar.
Millions of jobs and billions of dollars are at stake. The travel and tourism industry wants to get back up and running as soon as possible, but a return to the pre-pandemic days is almost an impossible ask. Bloomberg's Romain Bostic is joining us to speak to industry titans about how they're rethinking global travel and tourism business models. Romain?
Yeah, we really have to thank everyone here for this economic forum. This economic forum continuing here right now with a great discussion about the future of travel and tourism worldwide. With us right now, of course, a wonderful lineup of folks here. Tony Capuano, of course, CEO of Marriott International, joining us right now. Jane Sun, Trip.com CEO, and Rita Marquez, Secretary of State of Tourism, one of the most beautiful countries in the world over there in Portugal. Let's start with you, Tony, here. Pretty much everyone I know right now has been looking up airfares, checking out hotel rooms, trying to book their first trip for what for many of them is going to be their first trip in well over a year here. What's occupancy looking like right now over at Marriott?
Well, it's recovering pretty steadily, as you might expect. It varies fairly significantly from city to city, from country to country. But right now we stand on a global basis just a shade under 50%. And rising, which is really quite encouraging. When we look at occupancy trends month over month, we see a pretty steady improvement.
Is this primarily leisure travelers that you're seeing right now, Tony?
In many parts of the world, yes. Here in the US, for instance, the recovery is disproportionately being led by leisure travel. But if you look at a market like China, which is our second largest market, actually in March of this year, we saw business transient demand actually ahead of where it was in 2019.
All right, well, let's talk a little bit more about China, specifically, I guess, some of the outbound travel here, Jane. What are you seeing right now with regards to folks maybe getting back to something resembling normal travel schedules?
Sure. In China, because of the effective control of the virus, the domestic travel piece has grown very significantly. As Tony said, not only the leisure travel, but also the business travel have rebounded very solidly. In the past couple of holidays, including the Labor Day weekend and Dragon Boat Festival, we have seen double-digit growth in both hotel and airlines. In the highest day, we have hotel volume growth for 70% year-over-year growth compared to 2019 pre-COVID. For air ticket, we grew about 30% year-over-year on the highest day, and rental cars 300% year-over-year. So we're very excited for the recovery in China market. Now, on the international piece, if it is cross-border transaction, that's very different from country to country. For example, from China to Singapore, there is no quarantine required, so that many people would travel to Singapore. However, if you require quarantine, then people tend to stay and wait until the vaccination rate is high enough and the quarantine period can be shortened before they make cross-border transactions.
Yeah, it's a good reminder here that, of course, a lot of COVID restrictions still in place, whether they're hard or soft. Rita, over there in Portugal, obviously a country dependent on a lot of international tourism, particularly from folks over in Europe. We know things aren't quite back to normal with regards to some of that outbound travel. What trends are you seeing right now?
The trend is positive. So we have been observing a growth rate as far as international markets are concerned. Of course, we are mostly dealing with closer markets from Portugal, so Spain, Italy, France, even the UK, while we were in the green list. But the trend is positive. But as you said, we are progressing slowly in a steady pace, but still slowly. And long haul markets are still not allowed to get into the in Portugal are not allowed to get into the country, and the situation is pretty much the same in all European countries, by the way.
With regards to pulling people into Portugal here, Rita, as well as I guess some of the other tourism secretaries that you talk to from other countries, how are they dealing right now with vaccine proof, vaccine documentation, vaccine protocols?
Well, as you may know, Portugal has now the European presidency, the European Council. And so we have been working very, very hard with other European countries in order to harmonize rules. But not only harmonize rules, it's not only a question of harmonizing the rules and having everybody working with the same agenda. It's also tackling the certificate, the European COVID certificate. So we are now moving steadily in trying to execute the recommendations and even the legislation that has been recently approved by the European Union. So I guess that as from July the 1st, most of the European countries will have this certificate ready. So basically, we are working to have everything operational by the beginning of July, and this can allow, in a more easily way, people to get into the countries and to travel across Europe. So if you have a vaccine that is recognized by a European agency, or if you have been tested with a negative test, of course, a negative result, or if you have an immunization certificate, the situation is going to be easily managed by the authorities, and they will let you in a more easily with a more easy process.
So Jane, with regards to some of the bookings that you're seeing through trip.com, are you finding that some of your customers are running into any issues with regards to vaccine protocols or testing protocols?
Not really. In China, everything is being controlled and taken care of very methodically. So a couple of months ago, we were under 100 million people for having taken vaccine. But last week, the number already have grown to 900 million. And pretty soon, 1.4 billion people will be all fully vaccinated. So everything is being conducted very orderly. And the vaccine records are very well kept and stored. So you can take the vaccine records when you travel around the country.
Sure. And so, Tony, I guess as we start to see more restrictions get lifted, there's still sort of a confidence game here for customers. The idea that when they travel, they want to feel safe, feel like that they're not being put at risk here. What measures has Marriott taken so far to provide people with that comfort?
Like many travel companies at the start of the pandemic, we assembled a panel of experts, and we've let their opinion and their science really guide our operating protocols. As we sit here today, we're still requiring masks of our associates in virtually every hotel in the world, those that work inside. We continue to follow social distancing protocols. We're doing deep cleaning of our guest rooms and our public areas. And to your point, Romaine, all of that is intended to drive traveler confidence as they get back on the road.
One interesting thing I saw, I've stayed in a few hotels during the pandemic, including one owned by Marriott. And it was interesting how you were able to basically come in, go to your room without really having to interact with somebody, using a smartphone to do your check-in, to open your door, and to schedule cleaning if you wanted that cleaning. How long are those types of measures going to stick around?
I think they'll endure well beyond the pandemic. And what's so interesting to us, much of the functionality that you describe, the ability to check in and check out on the app, to access a mobile key, to use the chat function to interact with hotel staff, most of that was in place even prior to the pandemic. We've just seen an increase in adoption rates and an increase in comfort from our guests in using that technology. And I think now that they've become accustomed to using it routinely, we expect that'll continue well beyond the end of the pandemic.
Do you think that gives you a competitive advantage?
To the extent that we're easing the travel experience for our guests, absolutely. The trick for us will be to offer both. And even for certain guests, they may be on a business trip for one night. where they simply want to check in on the app, access mobile key, and go straight to their room. That same guest a month later may take their family on vacation and want to stop at the front desk, ask questions about local restaurants, ask for support from the concierge as they plan their activities during the vacation. So we've got to strike the right balance of offering both options to our guests.
All right, another question here about vacations. This is for you, Rita. Obviously, in recent days, we've heard from the UK, which has sort of shifted its stance on what countries it has on its so-called green list. We know there are a lot of other folks in that area that are looking to take their warm weather vacations here. Is there a sense here that the volumes of people that you're going to get over the next few months, that's still going to be below what you saw pre-pandemic? So let's say in 2019?
Oh, sure. Most international authorities that work the tourism sector, they believe that we only will have the same numbers, the 2019 numbers in 2023. So we will take a while. So we've been discussing we've been discussing all the measures implemented by hotels, by the governments, by the tour operators. But as you said at the beginning, we need to foster confidence, and it will take a while till we get the numbers we had 2 years ago pre-pandemic. Still, I think this year we'll have higher numbers than the ones that we had last year. So people need to travel. You know, it's part of our DNA. And so we are expecting to have here in Portugal a growth rate when compared to last year's numbers of around 20 plus percent.
Jane, so obviously global travel, whether it's tourism, business travel, whatever here, is to a large degree dependent on China, dependent on Greater Asia, if for no other reason than just the population growth over there. Your business is sort of broken down between obviously the domestic travel, but obviously a lot of cross-border travel as well here. Which areas of that business are doing best right now?
Yeah, the domestic China business is doing very, very well. As we discussed during the past few months, we have seen a sequential growth very healthily throughout the country, particularly during the long Labor Day weekend, which our government gives 5 days for students and family to travel around the country. That volume used to be brought to overseas travel market now is turning into the domestic travel volume. So we have seen a very robust recovery within domestic market. Now, on the outbound travel and international travel, when we look at our search results, the pent-up demand is very, very strong. So I think people have the money to travel, has the eagerness to travel. Now we're just waiting for the right time for the border opens when they can travel freely and safely around the world.
Tony, I want to talk about some of your international businesses, your international locations here. What's sort of the traveler mix that you're seeing there? Are they leisure? Are they business travelers? Are they wealthier? Or are they more middle class?
Again, it varies, in fact, quite significantly from market to market. I think if you look globally, leisure is the dominant segment today. But in those markets that have deep pools of domestic demand, certainly the US, certainly China, we are seeing pretty steady recovery in the other segments, business transient, and even in group. The thing that's quite interesting, though, pre-pandemic, it was pretty distinct. You could look at guests walking through the lobby of one of our hotels and know with a high degree of certainty, that's a business traveler, that's a leisure traveler, that's a group meeting attendee. And again, one of the trends that has emerged during the pandemic that we think will endure past the end of the pandemic is a blending of trip purposes. Guests who combine the necessity for business travel, bring their families, add a couple days of leisure travel. And I think that blending of trip purpose is great news for the hotel industry.
That blending of trip purposes, Rita, are you seeing that in Portugal?
Oh yes, for sure. Yeah, I think as it has been said, most of the travelers are from leisure, so they basically they want to enjoy a couple of days in the beach or near the beach with the sun, the Portuguese sun, ideally. But we see a lot of people, trying to explore other type of activities when they visit the country, and of course, corporate events are slowly opening up. But still, we do have golf. We do have other activities. We that could lead to this willingness to travel. I think at this so the market is quite flexible, and it could contemplate and could accumulate all types of willingness to travel, all motives to travel, and so I guess that the trend here is to be flexible enough to accumulate all these with these motives to travel, and be flexible enough and to grab the opportunity. And this is valid not only for the governments, but also for the private sector that needs to be flexible enough to accumulate all these metrics of factors that drive us to travel in Europe or outside Europe.
Yeah, before this interview, I was looking at some of the travel statistics out there, Tony, and while certainly Chinese travelers are a big part of the component, you're actually seeing some pretty big strength here out of the Middle East, both in terms of outbound travel from the Middle East as well as inbound. I know Marriott has had a growing presence in a lot of Middle Eastern nations. What's the general trend that you're seeing there right now?
There again, it varies a bit from market to market, but as the vaccine is more widely distributed, we are seeing pretty steady improvement. And use Doha as a proxy for this. In the first quarter, we saw occupancies in the low 60% range, but building each month in the quarter. And in fact, if you look at the statistics in Doha for March, we were actually ahead of where we were in March of 2019. So really encouraging pace of demand growth.
Jane, what are you seeing there as well with regards to travel to and from the Middle East?
Yeah, I just had a meeting with the travel bureau in Abu Dhabi. I think the interest for people travel into Middle East is very high, particularly for the high-end customers. We used to have this very high-end tour package, which will cost $200,000 per person per trip. It's selling very quickly on our website. These customers are very much eager to go to the Middle East and enjoying the sun over there. So we just had lots of planning meeting and wait for the right moment to bring the customers over.
Do you anticipate that we're going to see more direct access with regards to flights from either from your region over there in Asia to the Middle East?
Yes, I think so. I think once the vaccination rate reach to the herd immunity, where people will feel very safe to travel into the region, the airlines and hotels will all see a very significant pickup from the outbound travel from the Chinese tourists.
Have you seen at all, I know it's still a little bit early, but have you seen at all any interest, Jane, with regards to the 2022 FIFA Cup and the preparations for that?
Oh, the interest is very high. That we look at our search volume on our site. The search for these events are growing very significantly. So we believe once the border is opened, we will be able to bring lots of customers to these regions.
Yeah. Tony, let's talk about capacity here. Is the capacity going to be there specifically here for some of those Middle East nations, specifically, I guess, as well for the World Cup next year?
It's a good question. I look at a market like Qatar. We've got 11 hotels open. We've got 18 in the pipeline right behind it. I think many of our global competitors are similarly expanding their footprint across the region. But that expansion is much more long-term focused. Certainly, the World Cup is a terrific event, but we believe much more firmly in the long-term potential of the market. And that's what's really driving the expansion of our footprint.
Rita, when we talk about tourism picking back up, there is a lot of talk about, of course, capacity, whether there's enough hotel rooms, whether there's enough airline seats. There's also a lot of talk here about whether there are enough workers out there. A lot of folks, of course, left the hospitality industry during the crisis when everything was shut down. How many of those people, at least on a percentage basis, have come back?
Well, it's a very good question. I think we'll have a challenging task ahead because, before the pandemic, everybody was complaining that there was no enough workforce available in the tourism sector. And as you said, most of these people vanished with the pandemic. Of course, here in Portugal, we try to support the companies as much as possible. We injected tons of capital in the companies in order to preserve jobs. But we cannot forget that some of these gentlemen and lady just vanished. And so we need to create the best conditions for them to come back to the industry. And this involves an effort that should be developed by everyone, from the public side to the private side. It relates with salaries, of course, so we need to pay more. We need to provide the conditions for the people to balance their personal life with the professional life, because as you can imagine, all the tourism professionals need to work late hours and even during weekends. So we need to provide regulation to balance these two sides of our life, professional and personal contexts. And we need to value also the jobs related with tourism. Here in Europe, in Portugal, we have been providing training, massive training, in order for the people to be able to respond to these innovation trends that Tony just pointed out a couple of minutes ago. So we see this pandemic also as an opportunity to increase our value proposition. And so we need to guarantee that all these professionals are sufficiently motivated to address these challenges and to provide a better service. So yes, so there are a lot of challenges ahead in order to create talent and to retain talent in the industry.
Are there immigration issues, travel restriction issues that you have to deal with right now with regards to the hospitality workers?
I think I think it's happening everywhere. So tourism industry is quite open. In fact, when we travel, we look for diversity. We try to explore diversity. That's one of the trends, or one of the motives why we travel. And this implies that people in the industry are very welcome are welcoming hiring people from other parts of the world, right? So it's very common to have an hotel with a very diversified workforce, people coming from every part of the world. And in Europe, as you can imagine, and I guess that we talked about a lot about it, so we know about it. So we do have some migrant movements, and one of the industry that's trying to take advantage of these migrants movements is in fact the sector industry, because these people have language skills, they do understand diversity, and so we need to balance. One hand, these people are available, so they need to be absorbed by the industry. On the other hand, we do have some restrictions, labor restrictions, migrants restrictions, related restrictions that need to be also taken into account. So again, it's about balancing these two dimensions.
Absolutely. Tony, I want to get your thoughts here. Wage pressures, salary pressures, getting people back to work.
It's a significant issue for the industry. I think it's particularly acute here in the U.S. We're seeing things improve, but in those markets where demand has recovered most quickly, we do have some challenges. And I think there's a confluence of events that have created those challenges. There's still uneven policy about the reopening of schools. You've had extended unemployment benefits. You've had some challenges with bringing in foreign workers. And when you combine that, it has created some pressure. I think also there are industries that we're competing with for labor that maybe we haven't competed with in the past. Those industries like retail and online retail that have really thrived through the pandemic.
Is there sort of a balance here, though? I mean, if you do end up in a situation where you have to pay people more or offer more benefits here, I would assume at some point that would have to feed into what you ultimately charge for a room and your other services here. Is there a balance that you're looking for there?
Well, there's a balance. The good news is, by necessity, over the last 17 months, we've identified lots and lots of operating efficiencies in our operating model. And we think many of those efficiencies will endure post-pandemic. And at a minimum, they should mitigate some of the wage pressure that we're experiencing.
Jane, when we talk about the bookings coming out of China, and I guess we'll link this back, I hear, to the growth that we're seeing in the Middle East here. What's the dialogue right now that you see between your company and other companies in China and those in the Middle East? And more importantly, also, what's the dialogue between the governments?
Yeah, I think we have met many ambassadors from different countries and travel bureaus from different countries. Almost everyone we have talked to are very eager to welcome the Chinese tourists or Asian tourists. So they are ready to host these wonderful customers with buying power. However, they understand it might take some time. So what we do is, for the example of Singapore, we did an online Singapore Week, just to show the wonderful histories and museums and food, pre-educate our market. And then in the summer, when the kids are off school, we'll do an offline Singapore Week within the city of Shanghai, where you have lots of affluent travelers normally. So hopefully by doing these pre-marketing events, we're able to help the destinations to promote their wonderful attractions and make sure people are very well prepared and planned when they are ready to travel abroad.
Jane, have you done any traveling, any significant amount of traveling here?
I came back to China in March of 2020, and I have done lots of travel within China, but not abroad.
Okay. Tony, how about you? Have you actually gotten back out there on the road at all for business or for leisure?
I have, for both. I'm the perfect illustration of that blending of business and leisure travel. I've been in New York, I've been in Miami, I've been in Los Angeles. And as I look into the fall, I've got a lengthy trip through the Caribbean to visit many of our all-inclusive hotels. I'll be in Germany, England, Italy, Qatar, UAE, and Saudi through the balance of 2021. So I'm quickly getting back to pre-pandemic volume of international travel.
All right, and Rita, I guess I'll throw you the softball question here. I mean, I'm looking to plan a vacation here. My wife wants to go to Paris, and my mother wants to go to Senegal. My son just wants to stay home and play Minecraft. What's the selling point here? Tell us why we should go to Portugal.
Well, first of all, I think it's a safe country, and this is really so it's really something really important nowadays. So we launched, we were the first countries, by the way, in Europe, in the world, I guess, to launch a kind of a seal that guarantees that all the sites that are somehow related to tourism, accommodation, events, spaces that accommodate spaces and all that are COVID-free. And this, so it's really important to ensure that we continue to be a safe country. And a part of that, I think we do have a huge cultural heritage that needs to be valued and known and explored by all the ones that would like to visit the country in Europe. And of course, we do have our sun and beaches that are recognized worldwide as one of the best in Europe. We have been working very hard to maintain all these assets. And last year, with the pandemic, even though we had the pandemic, we were recognized to be the best European destination as far as tourism is concerned. So very proud of that.
All right, the best European destination. I'm going to put you on the spot here. If you had a dream vacation outside of Portugal, where would it be right now?
You know what? I think we should sell Iberia as a destination. So Portugal and Spain, we do have a lot of similarities, but still a lot of differences. So traveling to Spain by car, exploring the borders, I think it would be, you know, a nice place to be. Close from my place, from my home, but also far away enough, you know, with a couple of kilometers away. In order for me to feel that I'm in holidays, basically, that's the objective.
All right, very diplomatic answer. I've been to both places, both beautiful. Rita Marquez there, of course, Secretary of State for Tourism over there in Portugal. Also want to thank Jane Sun, of course, CEO of Trip.com over there in Asia, and of course, everywhere around the world. Of course, is Tony Capuano, the CEO of Marriott International, giving us an update here on the world right now of travel and tourism.
Joining me now is Sylvestre Radegond, the Minister of Foreign Affairs and Tourism for the Republic of Seychelles. Thank you so much for being with us on this program. Minister, Seychelles is the world's most vaccinated country, yet Seychelles has also seen a big surge in infections. Why?
Zain, thank you very much for having me. It's my pleasure to be here. I think it's a combination of several factors as we've seen it. First of all, I think what has happened is that with the vaccination, precisely because of the high number of vaccinated people became a bit overconfident, dropped their guard, and forgot about social distancing, started partying and so on. That's one aspect of it. And the other one, I believe, is that because of the cautiousness of government, we wanted to ensure that the spread of COVID within the community was limited, controlled. We went for an increased number of track tracing of suspected infected persons. So these are the two main reasons that we can say today we can allocate to the increase in numbers.
Okay. Well, Seychelles used Sinopharm, Sputnik, and Covishield. Are you going to plan additional shots, like booster shots, for the rest of the population going forward?
At the moment, we're concentrating on vaccinating the remaining 6,000 people that are not yet vaccinated. That's a target now, so that we can really achieve the community immunity that we're aiming for. We want to do that. And then depending on the science, because at the moment we do not know yet the validity of these vaccines. So once that is clear, we will look at the additional shots, booster shots that we need to offer.
What have been the challenges of a country like Seychelles, an island archipelago, there are about 100 islands, in balancing tourism and COVID?
It's been a massive challenge then. As you say, yeah, the economy depends still on tourism. We're looking now at diversifying the economy, moving to the other sectors like fisheries, for example. But yes, overnight we saw the airport closed, no planes coming, no visitors coming in, and the economy just was on its knees. So yeah, big challenge. And with that, of course, everything else around tourism, practically all the activities of the country, was at a standstill. And we're glad that is why we pushed for vaccination, maximum people vaccinated, so that we could reopen the borders as we did on 25th of March this year.
How are you balancing, continuing with that theme, climate change and tourism in Seychelles? What are some of the priorities that you need to think through as you think of global warming, the marine situation in Seychelles? What does that look like to you?
Yes, climate change is real. It's real for small islands. I think people do not realize that. We have two groups of islands in Seychelles: the granitic islands. But we also have the Coralline Islands, which are sort of low-lying, flat islands. And we can see, even on the islands, on the granitic islands, the main islands, we can see the erosion happening. So what we're trying to do is take the measures that we need to do to limit the erosion ourselves, the coastal erosion. We're sensitizing the international community on the help that they need to provide for the survival of the small countries. And we hope that the world will hear us because it's our very survival. With tourism, this is the message that we send out to tourists, and maybe it's because it's one of our marketing taglines. Tourists are flocking to Seychelles precisely because of the pristine environment that we have. We would try and protect the environment, and we hope that this is working and will continue to work for us.
Well, your beaches are certainly some of the most spectacular in the world. I hope to be there soon one day. Thank you so much for joining us. Sylvestre Radegond, the Minister for Foreign Affairs and Tourism, speaking to us from the Republic of Seychelles. Thank you so much.
Thank you very much, Zin. Look forward to welcoming you to our shores.
What happens when the milk runs out? Before the embargo imposed by its neighbors, Qatar imported almost 80% of its fresh milk from Saudi Arabia. Overnight, that number dived to zero. That singular moment sparked a transformation of Qatar's food system. Meet the unlikely heroes at the center of Qatar's food security.
All our products used to come from the neighboring country, from Saudi Arabia, from UAE.
And the fans to keep the cows cool in the hot Qatari climate, which helps keep milk production up.
Start very soon in growing our own crops in Qatar. In parallel, we're looking at expanding this crops business in Europe.
We're here with Mohammed Al-Sada. He's the CEO of Hasad Food, and the title of this panel is On a Food Security Mission. So your division of QIA, I want to understand, does food security essentially mean growing food in the desert in Qatar?
It's part of it, yes. We have developed a clear food security strategy for the country. Working with the key stakeholders in the government. It is divided to two divisions. One of them is developing the food locally, and the other one is about basically developing a storage for the key commodities that we can't grow in this area.
So in terms of local products, what's your main focus in terms of types of products?
It's basically dairy, poultry, meat, vegetables. These are in terms of production, and there are some downstream products as well that comes from through these lines as well.
Okay, and I know you have investments abroad as well. How do you think of splitting the portfolio?
So the way we operate basically in the company, we position ourselves as an investment fund in the food and agri under the umbrella of QIA. Internally, we have developed a local company called Hasad Qatar, which means it is a local company. and it's very operational, 100% operation. And basically, this is how we focus in helping the food security in the country.
So you're telling me before we began that your first day at Hassad Food was the beginning of the embargo, the Gulf crisis between Qatar and a group of Gulf states, Saudi Arabia and UAE in particular among them. How has that informed your focus?
Basically that, it did change the strategy of the company big time. So I landed just by accident on the first day of the blockade, and the first mandate we got, we found ourselves that we are in charge based on the government direction, that to close any gaps on the shelves, basically. And this is where we start, communicating with more than 6-7 countries globally to make sure that we stabilize the operation, to create a stable operation, to supply what the market needs. And we managed to stabilize the market in almost 7 days. We did reach almost daily 15 flights, other than the ships that we were bringing. So that was a very good and successful story for Hassad to position the company as a very strong partner to the government in the food security sector.
How has that changed the supply chain right now? What are the legacy impacts?
So now the game of food security is a supply chain. Supply chain basically is and being us as a peninsula, it has advantages and disadvantages as well. We created lines, what we call land plus sea, that comes from countries like Turkey, through neighbor countries like, to Qatar, from Azerbaijan, from all these countries, so land plus sea through using the Gulf. Mm-hmm. We have also created some lines that comes through Oman from the sea, and this is as well as, the airlines that comes to us.
In terms of stuff that's locally, growing agriculture as well as raising animals, it's really hot out there, particularly in the summer. How do you keep this process efficient? How do you think about efficiency and sustainability?
So now, technology and R&D basically is the answer. And technology and R&D globally is being advanced big time in this sector. This is what we are using. Today, if I'll give example about Beledna. Beledna, basically, the production per cows in this region is becoming above, we produce more than, the cows here produce more than 40 liters per day, which is basically is an amazing. That's using the technology and R&D, it does help basically to close the gap of the environmental challenges we have. It goes the same, greenhouses, vertical farming. That's this is the only way that we can close that gap. And we do a lot, Hassad, locally with some local partners like Hamad bin Khalifa University. We do a lot of research locally to basically improve the inputs, to increase the yields, improve the right, basically, climate, to be able to produce and close this gap.
Mm-hmm. Yeah, I just think of air conditioning as this really energy-intensive, process.
It is, but it's not only energy. We can't rely on air conditioning, otherwise it will be very expensive, and it will be commercially not sustainable. So we have to be very creative, and by using special inputs, improving basically through R&D, special inputs that help to increase the yields per hectare in this in the region here. So to make it more visible, when we use expensive model, as you mentioned.
Mohammed, thank you so much for joining us. Mohammed Al-Sada, the CEO of Hassad Food. Lovely conversation about producing food in a difficult situation.
Thank you, and thank you for having me.
From Georgia to Senegal, leaders have one word on their minds: recovery. Find out what economic plans these heads of state will pursue.
Mesdames, Messieurs, je remercie Son Altesse Cheikh Tamim Ben Hamad Al Thani pour son invitation et l'excellente initiative de placer cette édition du Forum du Qatar sous le thème de la réinvention du monde. La pandémie Covid-19 nous oblige en effet à réinventer notre présent et notre futur, tant elle a sapé les fondements de notre mode de vie. Cette crise a fragilisé toutes les économies et tous les systèmes de santé, même les plus performants, et perturbé les relations sociales, jusque dans les familles. Elle a exacerbé les limites de l'État-nation dans la prise en charge des problèmes transfrontaliers et révélé au monde ses propres paradoxes. Alors que chaque jour, l'homme repousse les frontières de l'invention, explore les horizons lointains de l'espace, sur Terre, il manque de vaccins, des masques, des kits de tests, des équipements de protection pour le personnel de santé et des produits vitaux pour les malades. Si nous avons vraiment appris les leçons de cette crise, comment alors réinventer le monde? Réinventer le monde, c'est d'abord redonner sens à l'économie réelle qui porte le progrès et le bien-être de l'humanité, en investissant davantage dans l'agriculture durable, l'élevage et la pêche, dans l'hydraulique, l'énergie durable, les infrastructures, la santé, l'éducation et la formation. Réinventer le monde, c'est ensuite faciliter l'accès de tous aux vaccins afin de favoriser l'immunité collective. Face à un problème mondial, il faut une solution mondiale, en lieu et place d'un nationalisme vaccinal qui apporte une fausse réponse à une vraie question. Et plus nous attendons, plus le temps jouera contre nous. À ce titre, le Sénégal travaille avec des pays et institutions partenaires pour contribuer à la production du vaccin. Réinventer le monde, c'est aussi créer les conditions d'une reprise économique globale, solidaire et durable. Nous le ferons en agissant sur les leviers du traitement de la dette, des droits de tirage spéciaux et de l'assouplissement des règles d'accès au crédit pour répondre aux besoins de financement des économies vulnérables. Et ceci en soutenant leurs efforts de résilience et de relance. Réinventer le monde, c'est enfin œuvrer pour une gouvernance politique, économique et financière internationale réformée et inclusive, afin qu'elle prenne mieux en compte les besoins et intérêts des pays en développement. C'est le sens de la déclaration du sommet de Paris sur le financement des économies africaines, tenu le 18 mai dernier à l'initiative de la France et du Sénégal. J'appelle tous les pays et institutions partenaires à soutenir cette déclaration, dont le contenu novateur est en harmonie avec le thème du Forum du Qatar. Puisque, de part et d'autre, nous voulons agir pour réinventer le monde. Je félicite à nouveau Son Altesse Cheikh Tamim et souhaite plein succès aux travaux du Forum.
First of all, I'd like to thank His Highness Sheikh Tamim bin Hamad Al Thani, Emir of the State of Qatar, for inaugurating such a global idea. And congratulations on a successful kickstart of Qatar Economic Forum. Qatar Economic Forum is a great platform and initiative in our ever-so-changing global landscape. It sheds light on countries of immediate region of Middle East, but also has a peculiar importance for the wider geography as well, including Caucasus region. Today, like never before, world needs unified, joint efforts in the fight against invisible enemy of global pandemic and its after effects, sharing of ideas, protocols, approaches, visions and possible solutions have direct impact on people's lives globally. COVID-19 pandemic has greatly transformed the reality where we live in. As we're regrouping our thoughts, economies are reopening, and new foundations are laid in order to adapt to the modern challenges. We should concentrate on finding solutions that will stand the test of time. Dear friends, dear colleagues, it is said that true architect always consults with nature. Exactly the same way, just like the true architect, we as the leaders should think through the essence of our each and every decision for the sake of our future generations, our children and their children. We have a very heavy burden on our shoulders in these very uneasy times, and only those who invest in sustainability, inclusivity, and in human capital will be the ones who will be able to truly embrace the future. And lastly, I'd like to wish all of you productive discussions as industry leaders, greatest minds, and decision makers are to participate in this forum. I am confident that many ideas will be exchanged and most definitely great solutions found. Thank you very much.
I'll see you in 90 minutes for our next session, Markets and Investing. Please connect to us on social media at Bloomberg Live, #Qatar Economic Forum. We'd really love to hear from you.